Let's talk recession. Once again, we've had a ton of questions, guys, this time regarding how a recession would specifically affect, or maybe not, individual stocks, and therefore what are the best stocks to be trading on an intraday basis during a recession. You might be surprised with the answer here, because we're probably going to tell you there's not going to be much of a difference when it comes to day trading. Let's talk about why certain stocks, guys, are still the best ones for day trading.
Yeah, I think it's one of those questions where, look, really, almost all the things still apply. You're going to have earnings as a catalyst sometimes, and then you're going to have economic numbers that come through, like inflation, and maybe you get the Fed speak, and that'll give some of your big tech names a bounce, or whatever you look at. But I just like some of these U.S.-listed Chinese names, and your Alibabas, your Neos, and specifically Alibaba in this case, because first off, a lot of what was moving this stock in general had far more to do with regulatory pressures from the CCP than it did with the fundamentals. Like, you look at the multiples on some of these names, and it's like, wow, I mean, they were already trading so far to the downside that who cares if they had economic slowdown, right? They're all beaten up so much. Different reason for coming down, which does mean in any kind of relief, they've got so much room to catch up and get back to the upside. Now, I'm highlighting Baba for another reason as well, and you can look at Neo for this. You can look at Li Auto as an example for this. XPeng across the board. Almost all of these names have reclaimed their 50 period, starting to reclaim 200 period moving averages. So there is momentum to the upside. Their volatility is still gigantic. When Alibaba has a strong day, it is not a little bit strong. It is still putting in 5, 10, sometimes even we've seen almost 15% style moves in Alibaba, and in both directions. So it's got a ton of volatility. It's not reliant necessarily on your typical catalyst. It's not that it only moves during earnings or only moves when the market moves. You'll have days where the market does nothing, and the entire group of Chinese ADRs will have gapped up 5 or 6%. I can't tell you how many times I've come into a flat market in the last couple of weeks and seen across the board, hey, Neo's up 2%, and Pinduoduo's up 3%, and Alibaba's up 1.7%, and the futures are at 0.2%, and Apple's done nothing. So I'm looking to that group almost every single day for trade levels, for trading opportunities, because I feel like they don't care whether the market's moving or not. And if we get a big time downturn, well, their valuations, some of their valuations like Alibaba are depressed enough that there's still going to be some opportunities, especially if you can only go to that long side.
If you're going to trade something where you want volatility, you go to tech, man. Tech runs the world, right? Tech has been the king of volatility. Obviously, on news days where individual stocks get news, there's a different situation there. But if you want to come in every day and you want to look at a group of names that are always going to provide you that opportunity, whether it's one or the other, there's going to be something there, especially in the top 10 of tech. I look at there. I have a list here. I'll pull it up for you guys, right here on my screen here. This is my watch list just for top tech. That's my top 10 tech. That's my top 10 S&P non-tech or not in the Nasdaq. And essentially, I just like to keep an eye on this group. I will always go through this, the Apples, the Microsoft, and they're ordered like this because it goes from weighting too. So I know Apple is the biggest weight in the Nasdaq, also in the S&P. So I'll go Apple, Microsoft, and all the way down to AVGO. Now I don't have Google both classes in here because I don't need Google's both classes. But at the same time, I just want to go through these names and find out which one's going to provide the opportunity. As you can see, market is up. Market is up. Nasdaq up 2.13%. Is there anything above 2.13% on this list? Yeah, Apple's up 2.3, somewhat in line. Okay, you got Tesla, you got Google, you got Nvidia, and you got AVGO, all of them outrunning the rest of the market as a whole. So clearly, these are going to be the leaders that are keeping this market at 2%. Then you got this, the Pepsi and Costco being down on the day. I just like to look at these names. There's going to be something. If you look at Apple, Microsoft, and Amazon and Tesla, just 4, there's going to be something in one of those 4 every single day for you to make a move on. If all 4 of them go quiet, you should probably go take a nap, because this is one of those things where there's going to be an opportunity somewhere. So I would lean on tech, just because there's always something there available to you. And when this thing goes, whichever name decides to go and takes the rest of the market with it, you know there's going to be some excitement. So we'll keep an eye on tech, as always, as we go in. And every single day, come in, check tech, and then move on to other names on the list.
And it's such a great point. As day traders, as intraday day traders, we require a few simple ingredients. We require price action, volume, and volatility. If you're in a recession, if you're not in a recession, doesn't really matter. If you can find those 3 ingredients, you can find opportunities, we like to look at opportunities that come with some sort of catalyst, typically around here, that helps to move a stock one way or another. So great look, guys, at a few ideas for day trading during a recession.